Hi everyone. In this video, we are going to be solving a question on consolidation in order to calculate the consideration paid by the parent in the investment in Palladium company. Now, what is this question about? This question is going to be revolving around the amount of consideration that we have paid in order to acquire the subsidiary. But this is not a straightforward question because there are two areas that you need to understand in this question. One, you have to do the reverse working, and second is the identification of the retained earnings for this question. So let's start with it. Platinum Company acquired 80% of the ordinary share capital of Palladium Company on 1st April 2000 by means of cash and contingent consideration. At this date, Platinum Company assessed the fair value of the contingent consideration at 250,000. Now, we have already studied about the fact that whenever we are going to be acquiring a company, we keep the contingent consideration at its date of acquisition fair value. Platinum Company calculates NCI using fair value at the date of acquisition, which means that guys, they are following the full method of goodwill, which was estimated to be 100,000, and the goodwill was 300,000. So now they have already given you the goodwill, right? You have to work backwards in order to find the amount of consideration paid in cash. Ordinary share capital 500,000 for the subsidiary. Retain earnings, okay. Now retain earnings are given to me at 1st of January, whereas my date of acquisition is 1st of April. So we have to find the retain earning at the date of acquisition, right? Profits for the year are 120,000. The profits are going to accrue evenly throughout the year. So first of all, what I'm going to be doing is, guys, I will be putting down the structure for the calculation of goodwill. Okay, so we have consideration, in which I've got cash consideration. We are going to find that. Then we have got contingent consideration, which is given to us, guys, in the question, and that is 250,000. Again, I'm working in thousands, guys, over here. Then we have got the fair value of the NCI, and when we talk about, guys, the fair value of the NCI, that is 100,000 over here. We minus the fair value of the net assets. Now, in order to find the fair value of the net assets, guys, first of all, I need the share capital of the subsidiary, that is given to me 500,000. And the second thing that I need is the retained earnings. But the problem over here is this, guys, and then obviously the outcome is the goodwill, which again is given to me 300. Now the problem is that I do not have the retained earnings, right? So what I'm going to do is I will create a timeline for all of you over here to understand the working. My start of the year is 1st Jan, and obviously the end of the year is going to be 31st of December. Now I'm acquiring the subsidiary somewhere over here at 1st April, and that is where I need the retained earnings. Now the point is that they have given us the total profit for the year, that is 120, and giving me the value of the retained earnings at the beginning. So here I have the retained earnings minus 300, negative retained earnings are there, and then for the whole year the profit is 120. Now what I'm going to do from 1st of January till 1st of April, so the profit is 120 for the whole year. Now from 1st January till 1st April, we have got 3 months. Now we are going to adjust the retained earnings like this: minus 300 plus the profit of 120 multiplied by 3 divided by 12. So the adjusted retained earning we are getting is negative 270 plus 500 share capital. Negative 270 is going to be my retained earnings. So the balance over here becomes negative 230. Now this is a total balance, guys, over here that we have got. So 230 is negative, 100 is positive, 250 is positive. So the balancing figure that we are going to be getting over here is going to be adjusted as, so what we are going to do, guys, we are going to total up the values over here. Now when I do the totals, first we will take 300 plus 230 because I'm changing the sides, minus 100 minus 250. So the cash consideration that we are getting over here is 180,000, and that is going to be your correct answer. So this was definitely a very tough question, and that could pose a lot of challenges for you in the exam. So as I said, two things to be taken care of: retained earnings calculation and the reverse working calculation, and you should be good to go in this question. Thank you very much.